Today is edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGo. We were glad you're here on a Thursday afternoon. I am Cesar Delgado. I am your host of today's program. The cattle markets is getting hotter than expected in the feeder cattle for right now. We were talking about that with Lee Schult from Everag. I will be asking about the cattle expansion with the prices with Lee. The commodities markets is there, but I am talking about it with John Heinberg from Total Farm Marketing. I will be asking about the fundamental on the grains markets for right now with John. Otherwise, this is your rural news sponsored by AgriGold. On March 4th, as a farm doc for the University of Illinois in Covington, Indiana, at the Beef House. There is some coffee and rolls, $40 each tickets per person for the event. Senator's perspective for the year around 315 to the country. Senate Jerry Moran perspective for the E15 year around for farmers in the Midwest. Finally, the FFA week is continuing on. Today is National Giving Day for the organization in Indianapolis. This been your rural news for this. This is your commodities markets for this afternoon, sponsored by Kyle Bumstead from Allendale Incorporated. Corn and beans prices are up for today. March corn is up to 5 to 10 cents. May corn is up at 3 to 6 cents. Wheat is waiting for a winter kill. Chicago May wheat is up at 5 to 10 cents. July wheat is up at 3 to 6 cents. Let's take a look for the livestock markets. Cattle is waiting for directory trade. February cattle is down at 3 to 6 cents. April cattle is down at 3 to 5 cents. May feeder cattle is down at 3 to 6. June feeder cattle is down at 3 to 4 cents. Cash hogs is down for today at 3 to 6 cents. Lean hogs markets are down for today. May hogs is down at 8 to 6 cents. June hogs is down at 3 to 6 cents quarter. This is your commodities markets for this afternoon. The cattle markets is getting hotter than expected in the feeder cattle for right now. We were talking about that with Lee Schult from Everag. Lee, how are things with the feeder for right now in the markets?
Well, we're off contract highs. As you look at the futures market, you have to go back to then January 28th, where we set contract highs across the board. We're anywhere off $9 to about $5 off as you get out more into the deferred. I think it's one of those cases where sometimes a healthy market has to take a break or a pause, and that's a bit what we're seeing here. I think that when you look at the fundamentals, there's plenty of optimism here. As you look at the most recent cattle inventory report, it showed feeder cattle outside of feedlots was slightly down for the year. I think there's a lot of anticipation that we start to see those feeder cattle supplies starting to tighten up. We'll get another cattle on feed report tomorrow to see where those placement levels are and what those implications are for the cattle on feed numbers.
Do you recommend for your producer about LRP on the risks to the prices?
Well, as I think, when you look at where these current feeder cattle prices are, I mean, certainly, where prices are being bought for those feeder cattle, I think producers are a bit betting on the come. As you look at, where January placements were. I think that equates out to a 205 and then as we get into February here, I think that's more of a $200 uh, a break even as you get into August. So right now, I mean that's certainly above where futures markets are currently at. But I think producers.
Do you have any final thoughts on the cattle markets with these cattle trend?
Yeah, I think, important to keep in mind is, and, we've seen it here over the last month is, I expect, much of the same as far as from a volatility standpoint. That makes, producers, executing, their risk management strategies in a timely manner, even more important because, of these large swings that we've seen in markets. So when they're identifying some opportunities, through a variety of strategies. I think it is really important to act upon them because we are seeing markets react to a multitude of fundamentals, technicals as well as outside information. And so keep that in mind as we navigate these cattle markets over the coming weeks and months because I think it is going to be much of the same when it comes to a volatility standpoint.
Where people can find good more information on your reporting?
Yes, I would encourage listeners to check out our various resources from Everag that hopefully can be of service to them as they look to understand more about these markets and gain insights as well as help to manage risks through a variety of strategies and tools that we offer.
Thanks, Lee.
Thank you.
This is Lee Schult from Everett, on back roads of Illinois. The commodities markets is there, but I am talking about it with John Heinberg from Total Farm Marketing. How are things with you? Let's discuss about the commodities markets, especially in the technical fundamental on the grains. Can you tell us about it?
So yeah, Cesar, I'm doing well. I haven't talked to you in a couple of weeks, so unfortunately been fighting bugs here with flu last week and head cold this week. So hopefully my voice holds out here for you. But with that, let's just get right into the markets here. I mean, obviously we're back to $5 on that March corn, got through that a little bit this week, and then fell apart yesterday. Today, pretty quiet day overall, but that demand side of the corn market continues to be very, very supportive. We're going to see those export sales numbers again tomorrow morning, probably going to stay at a very strong pace. At least that's what the market's anticipating, and I am as well. We've had our share of published sales here over the last week or so those numbers will show up on that report tomorrow. And that's going to keep this front end of this corn market, this old crop side, still heavily supported here. Is just global supplies for corn are just relatively tight. And realistically, right now, Argentina, Brazil, they don't have a lot of corn supplies, if any, for that export market. So that just makes the U.S. the only game in town, and that keeps them price value in. Now, with that, maybe we've ran this thing a little too far here, so we'll have to see how that kind of plays out over the next few days. End of February is typically not one of the stronger time periods for the corn market and soybean market, so we'll have to see if next week we get some pullback for once, which this market could easily do. Moving over into that soybean side of the equation, good strong day today, maybe reacting to some hotter forecasts there for Argentina again. Maybe next week's supposed to stay on the hotter side, but then some rains again coming back after it, but might be enough we throw a little premium in that soybean market. Again, good strength in bean oil today as well, helping support bean prices, but we're still pretty range bound here, just kind of working back to that 1045, 1060 area on the March and the May contracts, respectively. As we're still looking at this large supply of soybeans coming and a global supply that is just the exact opposite of corn, which is burdensome. Lastly, you got the wheat market here, which has had such a nice rally, maybe a little bit of profit taking off the top of that rally these last couple of days as prices are moving back to find some support. And it looks like maybe we found that area today for both the KC wheat as well as the Chicago wheat. So we'll have to see, again, like corn, the global picture for exportable wheat that remains relatively tight. We've watched the cold weather through the southern plains, watching the weather forecast in the Russian area in terms of cold temps for their winter wheat crop. And I think that's helped bring a little premium in. Maybe the softening here is as we kind of move past those colder temps. But overall, right now, the fundamentals in the grain market, especially for corn and wheat, stay relatively friendly, whereas soybeans, unfortunately, things are still just burdensome. But this market's still at least holding its ground here around this 1050 area.
I'm sorry to hear that. What is the fundamental on the corn side,
Well,
John?
I just kind of covered them a little bit, but I'll touch base on them again. We're watching what's going to be happening here for now. The focus in this corn market may get past the demand a little bit, even though it's still strong. We're going to get our first taste of 2025 numbers next week with the USDA outlook forum. Now, those are budgetary items and typically aren't major market movers, but with the modern market, with the way the things trade news and information, this becomes a tradable event. So that could be another reason we could see the corn market pause here as we get just an estimated acre number. There's no science behind it, no research or anything, or surveys put out. It's just a number the USDA feels as a baseline point. Obviously, we'll get a better look at that as we move to the March planning intentions report here, just about a little over a month away. So right now.
Do you have any final thoughts on the cattle markets?
Well, cattle market's been in sell mode for the last couple of weeks here now, obviously kind of led by the softening in the cash market, as well as a softening in retail values. So we've dropped about now $15 off those recent highs as the funds have been moving out of that record long position that they established here a couple of weeks ago. Now, maybe found a little footing today. We got cattle on feed numbers coming tomorrow. Market is expecting those supplies to still stay tight, so I don't think there's going to be any surprises in that regard. This market may be a little bit more driven by that trend in cash and retail values, which, like I said, have been softening. Cash trades still trying to get put together this week. Looks like bids are still softer than they were last week, so we'll have to see how that trend goes. Cattle market, though, I think is getting close to an area where it can find some buying opportunity. We'll have to watch here. I'm counting on maybe a little bit break further in that April contract, maybe another couple of dollars down. And that might be a spot I start looking at some calls for the summer months to put over top of cattle in the pen or any cattle that you may have hedged here with those good cash prices.
What do you recommend for the premium for cattle markets? Do you recommend for LRP on this markets?
Again, having those margin protection or revenue protection type programs, there's so many different ways to protect cattle and the value that's out there. You got revenue protection, you got margin protection. You can work with somebody like myself. You got the options of the board to use hedging strategies. So realistically, even here at 193 on the April, we're still looking at significantly high value. So, cattle market can move in waves very, very quickly. producers, I just recommend if you know a break even, you can protect those values, please do, because we're kind of in that spot now. We've put so much in terms of the cost of those feeder cattle into the markets. I just don't want to see those margins fall apart, especially if grain prices continue to rise. So make sure you're looking at those different types of protection tools just to protect yourself in the revenue front.
Thanks, John.
Thank you, and have yourself a good day.
John Heinberg from Total Farm Marketing, One Back Roads of Illinois.
Thank you, Cesar, and you take care, and we'll talk to you very, very soon. And everybody else, be safe and stay healthy out there.
Thanks to Lee Schult from Everag and John Heinberg from TotalFarmMarketing.com. This been Back Roads of Illinois. I am Cesar Delgado. You have a great day.